understand what really is happening with the entire sugar sector. We've got Prashant Biyani, VP Institutional Equity Research and Sector Lead for Agri-Inputs, Sugar Hotels at Elara Securities, joining in on the show right now. Prashant, hi, morning. Good to have you on the show. The cabinet said, cabinet has yet again approved the FRP hike without any corresponding increase in sugar MSP. Wanted to understand about sugar business margins and where do you think they stand currently and how much could they actually compress consequent to this FRP hike?
This is certainly negative for the sector, but the difference is that the FRP is applicable for most of the states except UP. Especially it is applicable in Maharashtra and Karnataka. So the mills based out of these two states are likely to get more impacted out of it. For example, for companies like Sri Lanka Sugars or for some of the plants of EID Parry, but most of the all of the UP-based mills are unlikely to get impacted by this. SAP is what is applicable for them. So the impact will be applicable across all companies except for those who are operating out of UP. Now, without a corresponding increase in sugar MSP, this is certainly detrimental because government has not increased the price of ethanol as well, except of C heavy ethanol. Other ethanol prices are yet to increase, and sugar price has increased overall, but it is going to be detrimental for companies based out of Maharashtra and Karnataka.
All right. Hi, Prashant. Good morning. This is Shrishti also joining in. But with respect to the state advisory price, should we be penciling an increase here too? Because UP SAP currently stand at 370 rupees per quintal. Any increase expected?
This year, we are not expecting any increase. The revision is due sometime between September and November. If any, there should be a limited increase this year, but certainly next year we are expecting some increase because UP goes for election in somewhere around Feb 2027. So this year there is a likelihood that SAP may not increase or increase marginally at best. So UP-based mills are still better off.
All right, but Prashant, when it comes to ISMA, then the sugar body is seeking a hike in the minimum selling price of sugar, but the prices haven't been revised since 2019. Now, realistically speaking, do you foresee a MSP price hike?
MSP price hike can be there, but I think it won't be aligned with the current market price. Post the announcement of 1 million tons of export, we have seen around 8 to 10 odd% increase in sugar price in the domestic market. So the government has been evaluating MSP. ISMA has also been asking government to come out with a fresh MSP. But I think even if government announces something, the MSP will be decently lower than the current market price of sugar. So literally, it is unlikely to have a meaningful impact.
Prashant, where is it that you actually see retail prices of sugar stand currently? And how do you think higher MSP prices, if all government were to revise it, aid margins for sugar companies going forward then?
So ex-mill prices of sugar right now stands between 40 to 41 for UP and maybe between around 39 for Maharashtra-based mills. What MSP does for companies is that whenever there is higher production of sugar, the price of sugar declines significantly during the crushing season. Having an MSP attached to it definitely gives a floor to the sugar price beyond which it is unlikely to correct. That way, it provides limiting. It limits the loss in that way for the sugar mills during the crushing season, where some of the smaller mills who are facing working capital challenges, they may want to get more cash by selling it at a lower price. MSP comes in handy at that point of time when production is on a higher side. Right now, we are struggling with sugar production as well. So that way, MSP may not come in very handy at this point of time.
All right, but Prashant, do you think that the government can probably focus on framing a formula for the sugar industry, a coordinated FRP MSP move, which can ensure the margins of the sugar mills are not impacted due to disproportionate increase in FRP or SAP?
Government has time and always done so, but I think strict implementation of the same is not adhered to, and it also depends. There are political angles to it, plus there are weather vagaries as well. Now the ethanol angle is also attached to it. So ISMA also, or the corporates have also been asking for a stricter implementation of policy, but it does not happen always. So we are not expecting a sea change in those policy implementations. More or less, things may remain as it is. But the trigger for the sector is most likely to come in the form of ethanol blending increase, which the government is planning to do so sometime in future. From the current cap of 20%, it may increase somewhere higher. And then if there is a increase in ethanol price sometime during the later part of this, that may come in as a relief for the companies.
Right. Prashant, the other thing I wanted to talk about was the fact that government is now set fresh ethanol blending target of 30% by FY30, right? How big a positive do you think this will continue to be for sugar companies? And sugar-based ethanol versus grain-based ethanol, will grain-based manufacturers be the eventual winners?
Actually, government has not come out with it officially, so the official number still remains at 20%, but government is evaluating to increase it. Whether it will be 25 or 30 or higher, one is not sure till now, till the official document comes out. But yes, incremental blending will be contributed from grain or rice or maize, but it further increase in contribution of ethanol from sugar sector is very difficult. First of all, we are already short in terms of sugarcane availability. Everyone is scouting for more sugarcane, but it is not available. And secondly, if sugarcane prices continue to increase the way they are, but it is not, it does not coincide with the ethanol price increase, even the current diversion of sugar into ethanol will reduce. So that way, the contribution towards blending from sugar industry or sugar cane will increase only if there is a commensurate increase in ethanol prices also. Otherwise, it is the incremental blending contribution has to be from maize and rice.
Right. Okay, Prashant, great to have you on the show. Thank you so much for your time today. Good speaking with you.
Thank you.
Okay, that's the view coming in on the entire sugar sector. Still quiet for market, although we've slipped a little bit.
If you like this video, then like, share and subscribe to ET Now.